This is Matthew Cratter from Trader University, and today I want to talk about why rich people want higher taxes. This is a little bit counterintuitive until you understand it, but I think this result will surprise many of you. I've been getting a lot of questions about the new Biden tax proposals, especially the piece that taxes people earning $1 million or more at rates as high as 43.4% once you count the long-term capital gains tax piece plus the Obamacare surplus piece, the 3.8%. I've been getting a lot of questions about this, and so I thought I'd begin by telling you a story. I was on an airplane in 2009, and I just happened to be seated next to a guy who had just made partner at some boutique investment firm. He didn't tell me the name of his company, but he was very proud because in the midst of this great financial crisis, he had just achieved a net worth that was north of $100 million, which was even more in 2009 than it is now. By any accounts, a huge amount of money. And because it was early 2009, we started talking about the recently completed presidential election. Obama had just been elected in November of 2008. So we were talking about it, and he had mentioned that he voted for Obama, and I was asking him the reason why. I thought maybe he liked Obama's social views on gay marriage or abortion or something like this. And he just laughed and said, no, I voted for Obama because I want much higher taxes. I like voting Democrat because I know the taxes are going to be higher than under a Republican. And the reason he wanted higher taxes was so that he could build a moat around his family dynasty. He had already made all this money for his family, and he now wanted much higher tax rates as a way of making it much more difficult for other people to accumulate similar wealth. So maybe he made 150 million or whatever, then he was left with 100 million after paying taxes, or however the math works. This is something a lot of people don't realize. They wonder why a lot of billionaires and really wealthy people vote Democrat. Now, obviously, I don't want to generalize for everyone, but I've had a similar conversation with a lot of wealthy people who say they want higher taxes, in particular higher capital gains taxes, as a way of making it more difficult for new people to come up the ranks in wealth. If you're finding this video helpful, I encourage you to hit that subscribe and like button. Maybe share it with a couple friends as well. Now, one problem with much higher tax rates is it does throw a wrench in what has been traditionally one of the strongest parts of the U.S., which is its innovative economy, all of its startups, etc. The U.S. has been this place where people immigrate to, and then they have this liberty and freedom to create new companies, and it's a much more open environment than many parts of the world that are much older. Now, what we can see is that one result of this is that the rich of one generation are often not the rich of the next generation. If you go back and look at the list of the richest people in the U.S. in 1980, most of the people, they had either inherited the wealth. In many cases, it was industrial wealth, like the DuPont family, for example. But if you look at the list, these people got wealthy either because of their parents and grandparents or in their own lifetime through oil, precious metals. We just had that huge bull market in commodities in the late 70s, precious metals, other commodities, shipping, etc. Now we fast forward to 2021, and none of these families are the richest families anymore. We have mostly tech wealth, and this tech wealth is the result of genuine innovation, the iPhone, all of Amazon services, etc. And this is very different than other countries. For example, I found this article fascinating that the richest families in Florence today are the same families that were the richest families in Florence in 1427. Now, this is what a stagnant social structure looks like, where there's not innovation, where there are various laws in place that make it very difficult, or maybe it's just the general cultural environment is not as conducive to startups, etc. But whatever it is, this is stagnation, and this is not what we want. Obviously, taxes in Italy, capital gains taxes in particular, have been much higher than in the U.S. So the really unfair thing about having high capital gains taxes is you get taxed on all these different levels. They tax you when you first earn the money, an income tax, There's a Social Security tax and Medicare and all these parts of the income tax. If you live in a state that has a state income tax, you add that on. So if you live in California or New York, you pay very high marginal state income tax rates. So you pay an income tax on when you first earn the money, if it's a salary, a W-2 sort of thing. Then they tax you when you invest the money. This is the capital gains tax. There's the short-term capital gains tax, which is roughly equivalent to the ordinary income tax brackets. And then you have long-term capital gains tax rates, which have been historically much lower, anywhere from 0 to 20%. And then if you're above a certain level, they tax you when you die, the estate tax. This is really like something out of the Matrix, where the people are in pods and their dynamism and their energy is constantly being sucked out of them in many different ways. And lest you think that this estate tax exemption is very high, it is fairly high at this point, but part of Biden's plan is to bring it down from 11.5 million down to 3.5 million. Now, if you own a family farm or something like this can be devastating. People have to sometimes have to sell off their house or sell off their farm when the elder dies and they need to pay an estate tax. So you could be very land rich. You could own a nice ranch or a nice farm and have a net worth in excess of 3.5 million and actually be forced to liquidate that to pay the estate tax, even though you're just eating beans and corn for every meal. You're land rich, but you're not really income rich, etc. Now, the biggest and the most unfair part of this, I think, and this is not a diatribe against either party, I should point out. Both parties in the U.S., the Democrats and the Republicans, really do work for the rich, in my opinion. So I don't mean to single out the Democrats, but I would say Biden's plan is especially egregious. It's egregious further for this reason, that you're forced into investing due to inflation. If we had a stable form of money, you would never have to invest in an index fund or hire a financial advisor. You would just earn the cash and it would sit in your bank account and it would not be depreciated by all of the money printing and the low interest rates. So people are forced into investing due to inflation, and then they're just trying to keep up with just maintain the purchasing power of their money. And then when they try to withdraw that, they get taxed at the capital gains tax rate. So in that sense, it really should be zero because all of the inflation is being driven by the government. And let me talk a little bit about how that happens exactly. We have huge deficits in the U.S., huge deficits at the federal level. The Fed has to buy up all this excess debt that funds the government's deficit spending. They do this by printing new money, as we were always talking about. And when the Fed money printers go burr, printing new money, it drives up asset prices, which disproportionately benefits the already wealthy who own stocks and who own real estate. It really helps the top 50% and especially the top 10%. So asset prices go up, stocks, real estate, Bitcoin. And then what does the government do? Someone like Biden comes in and decides to raise the capital gains tax. So you could have a situation where the stock market starts to go up 50% a year because we enter hyperinflation, but you're not really making, those gains are not real gains, they're nominal gains. And once you adjust them for inflation, you may even be falling behind. But the really unfair thing is if you need to take profits, if you need to sell, then under Biden's plan, you'll be paying a much higher marginal tax rate. And this is in the context of you just trying to maintain your purchasing power. You're not trying to get rich in the stock market because you're already, let's say you're already wealthy, or you're trying to become wealthy and you're trying to make sure that those dollars, which are the product of your time, of your hard labor, you're trying to make sure those dollars are not devalued. And so you're forced into riskier assets like stocks and real estate in order just to keep up. So the government gets to punch you two ways. They hurt you through inflation by devaluing the dollars in your pocket. And then when you take those dollars and you put it in the stock market, for example, and you try to maintain your purchasing power, they hurt you through taxation. Inflation, of course, is a form of hidden taxation. It's driven by the Fed money printers and the government living beyond its means, having to spend. Now, under Biden's plan, as we said, the top capital gains tax brackets can be 43.4%, which includes that Obamacare tax. If you live in California and you're in the highest tax bracket, and I mention California because this is where all so much of the tech innovation is happening, though it's increasingly spreading to lower cost states like Texas, Austin in particular, and Florida, Miami in particular. But if you live and work in Silicon Valley, which is in the Bay Area, or Silicon Beach, which is Santa Monica and the LA area, the top bracket under Biden's plan is going to be 56.4%. So the state and federal government will be taking. These are obviously the marginal rates, so I'm not sure what the combined rate ends up being, but it's very close to taking 50% of what you earn. Now, the immediate response to this, of course, is, well, who cares, because this just affects those who make $1 million or more. But if you've lived in these startup hubs, as I have, I used to live in Silicon Valley, you meet people who were very poor for many years. Maybe they came from India or China, or they came from the East Coast or the Midwest, and they live very frugally for 10 years while they're running their startup. They live off of ramen, is the cliche. They get paid a below market salary, and then it's the Bay Area is very expensive. If you're renting and you're not making a lot of money, you're usually going to have to end up paying something like 50 or 60% of your income on rent, especially if you live in San Francisco, which is where Silicon Valley sort of has moved to over the past 2 decades. So what about the founder who basically has a net worth very close to zero and is just scraping by for 10 years? Then he has a big payday in year 10. This is, of course, how startups work. You don't make money for many years, and then you make a lot of money. So here's a guy or a gal who created new jobs, new technology that improves the lives of people everywhere. And in year 10, he or she is going to make $1 million or more dollars. But this is he or she has been living below making really no money for the previous 10 years. So it's all concentrated in year 10. And this is the kind of person that the cap gains tax under Biden's plan really hurts. Here's someone who's created new jobs and new technology, and he's going to be lucky to be able to afford a tiny house. If you know anything about San Francisco, the median price of a house right now, or the typical value, is $1.4 million. And just to give you an idea of what $1 million buys there, here's a house that is going to sell very, very quickly because it's actually very cheap for what it is. 2 bedrooms, 1 bath, 885 square feet for basically $1 million. This, just glancing at it, knowing a little bit about the San Francisco market, this will probably go for probably as high as 1.1 million. There's probably going to be a bidding war on this because they underpriced it slightly. And so when you begin to think of the government taking 50% of your income, let's say you make 2 or 3 million from your startup in year 10. Obviously, you could make a lot more if you're very successful, but startups are difficult and they have a very high failure rate. But let's say you make a couple $1 million, you pay 50% in taxes. You're lucky to be able to afford a house like this after 10 years. And of course, a lot of this just is California's problem, but it really gets compounded when the capital gains, the top rate, goes from, call it 23.8% to 43.8%. And what really bothers me about this the most is that politicians, for the most part, are people who have never created anything in their lives. They're like highway robbers who just wait there and try to skim off some of the products of your labor. Biden has been a politician his whole life. He's lived in very nice houses and that are paid for by his donors, etc. And here's someone who's never really contributed to the real economy or to mankind in the same way that like a Steve Jobs or a Elon Musk has. And so this is the really galling thing about politicians and how they think about taxes, etc. And Biden, of course, is already very wealthy himself from his years as a public servant. I'm going to be, it looks like I'm going to be heading out of internet territory for a couple days. I hope to be able to make a video by next Wednesday or Thursday. If I have a good internet connection between now and then, I'll definitely put out a video. But in the meantime, you can watch my huge video collection on YouTube. I've made a video almost every day for the past year and a half or so. So if you, this would be a good time to play catch up, maybe watch some of my old Bitcoin videos if you're looking for something to watch while I'm on the road and away from the internet. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.